So let's start with let's start with ordinary income, because this is where most people's source of funds always starts, right? Even if you end up buying some assets or whatnot, you have to be able to show some form of income which allowed you to purchase those assets, right? So when you're proving ordinary income, there's two main ways that most people will earn income in life. One is obviously through a third-party employer, where you're basically working for somebody else. You're their employee. You have either a salaried or a contracted amount that you're paid over time, and then that money basically collects and accumulates over time. The second would be a self-employed route, where you're basically an entrepreneur or a business owner, and you started this business maybe even from scratch, and you ultimately led it to a point where it now generates enough income for you to use this income for your EB-5 investment. Now, the documentation for both of these is going to be quite different, right? For one thing, for third-party employers, there's a lot of different ways that you can show your employment income, but it's important to understand that you're not just showing the fact that the money was earned. As Ben Franklin once famously said, a penny saved is a penny earned. So it's not just that you're showing that you were able to earn capital over the years, it's that you were able to save some as well. So you'll see here that the examples that we've given, and this could be any number of documents, anything from tax returns, and if you're in a country that doesn't have tax returns, okay, how about employment contracts, pay stubs, confirmation letters. You can get a letter from the employer, even if it was a previous employer, just confirming that investor X was with us in XYZ role for this many years and made this much money during his time. We've seen yearly breakdowns that in year one, person X was making this salary. In year two, person X was making another salary. So all those things are important to get documented any way that you can. And I would say the more documentation you have, the better. A lot of investors will ask, well, okay, I've got my tax returns. That's good enough, right? That's all you basically need from me. No, you want to get as much information as you can. A W-2 or a 1099 here in the States is fantastic. But if you're abroad and you're earning money from an employer, just because tax documentation may not be as good as it is here in the States, in certain countries, like for example the Middle East, there are no taxes. That's okay. You can also get pay stubs, you can get employment contracts, you can get offer letters. There's a lot of different ways that you can prove first that you were employed. Then the proof is that you actually receive payment from that employer, right? Step one, prove that you were employed. Step two, okay, now that we know that you were working there, how much money did you make? And this, you really do have to use either bank statements that show kind of a repeated flow of income, pay stubs, obviously if you have them, yearly, annual tax reporting, any kind of form that shows your total income, how much of it was taxed, how much of it was your take home, all of that will be important. And that will basically show, okay, this person worked here, this person made a certain amount of money. And then the last piece of this is, were they able to save this money over time, right? And that accumulation and maintenance of funds is where a lot of people can kind of get tripped up on ordinary income as a source of their fund. There's really no way around it, unfortunately. You have to show your bank statements, and you have to show that money basically entering the account and staying there and basically growing over time. That accumulation and maintenance of funds is extremely important, and one of the key things that USCIS looks for when you're using ordinary income as your source of fund. For self-employed, it's going to be a similar idea once you get to the point of accumulation and maintenance of the needed funds, right? So when you get to the end of, okay, I've been making money, have you saved it and have you accumulated that in your account? That analysis is the same. What changes now is no one else was employing you. You have to show your ability to start this business, that the business did well, and that you ultimately made money from the business, okay? And this is a much more rigorous process where you're really gonna have to dig deep and find as much documentation as possible to show how your business that you created, possibly from scratch, has now kind of gained momentum, started producing income, and produce income for you to be able to save. The first step of this process is going all the way back to when you first started the business, right? When you started the business, how are you able to capitalize it? If it was a business, and not every business needs a lot of capital to start, maybe you're starting, let's say, an accounting firm and, or a consulting firm, and you only needed like $20,000 to get it off the ground just to buy equipment. Okay, great. We need to show where you got that $20,000 from. And guess what? If you were working at another company, if you were an employee and you had to source the $20,000 from your income, you're going to go back to that third-party employer analysis that we just went through. Okay, so you establish where you got the money to start the business. Okay, now it's the process of showing the business ownership. Has it changed hands? Have there been other people who have been involved? Was it a partnership? Was it a corporation? Do you own shares? All of that structuring, all of that's going to be really important, especially if it changes over time. You're going to have to document all of that, and then it gets even deeper, right? What kind of business is it? Is it performing well? How has it done over the years? Audited financial statements, corporate tax returns, sample contracts, invoices, purchase orders, bank statements for the company. All of these things are going to be very, very relevant to USCIS when you're showing that this business was successful. It was earning not just revenue, but also you were able to derive profits from it and be able to use that as your income, which then ultimately accumulated over time and you're now using for your EB5 investment. So it's clear to see that although very much possible to have, be a self-employed entrepreneurial individual who's now using their funds from their business as a form of their, as a source of their funds, there's a lot more rigor and a lot more documentation that you're going to need to provide to show that the business is legitimate. It was started with legitimate funds and is now producing legitimate funds.